Welcome, curious minds, to the deep dive. I want you to take a moment and just imagine something truly incredible. At any given moment, nearly 1 million people are soaring through the skies, propelled by an unseen, massive, and intricately powerful force. We're talking about aerospace engines.
Yeah, it's mind-boggling when you actually stop to think about it.
Exactly. Today, we're not just looking at machines, we're diving deep into the future of flight itself.
Precisely. Our mission today is to really unpack the recent investor update and that second quarter 2025 earnings call from GE Aerospace.
Yeah.
We've pulled out the most important insights from all the detailed sources you provided.
Right, basically giving you a shortcut to being incredibly well-informed about where aviation is headed.
Exactly. Saves you wading through all those pages.
And look, this deep dive isn't just for Wall Street folks. This is for anyone who's ever looked up at a plane and wondered, how are the engines carrying all those people evolving? How is safety ensured day in and day out?
And surprising innovations are actually on the horizon because there's some really cool things happening.
We're going to explore how GE Aerospace balances the immense demands of today's global fleet with their, pretty ambitious vision for tomorrow.
It's a fascinating balancing act.
So let's start with the basics, the foundational purpose that drives GE Aerospace. Their stated mission is incredibly powerful: to invent the future of flight, lift people up, and bring them home safely.
When you consider nearly 1 million people in the air at any given moment relying on their tech, it's a profound responsibility.
Absolutely. And it seems like a commitment really embraced by their 53,000 employees.
Yeah, you get that sense. And what's compelling is how that purpose aligns with their recent financial performance. The second quarter of 2025 was exceptionally strong.
Strong how? Give us the highlights.
Okay, so orders were up a remarkable 27%. Adjusted revenue climbed 23% to $10.2 billion. Operating profit also up 23% to $2.3 billion.
Wow.
And maybe most impressively, their free cash flow nearly doubled, hitting $2.1 billion.
Doubled. Okay, those are indeed some impressive numbers. But looking deeper, how did that break down across their different segments, commercial versus defense?
Good question. Well, their commercial engines and services, or CES, really led the charge. Orders there were up 28% and revenue jumped 30%.
30%, okay.
Yeah. And their defense and propulsion technologies, DPT, also saw solid growth. Orders up 24%, revenue up 7%. So strong across the board, but commercial was really flying.
So if we connect this to the broader strategy, what does it tell us about maybe the resilience of their business model?
That's key. It highlights a strategic advantage. A full 70% of their total revenue comes from recurring, predictable, and highly profitable services.
So it's not just selling the engine up front.
Exactly. It's about the long game, the maintenance, the parts, the service agreements. This insulates them quite a bit from the ups and downs of new aircraft sales. Provides steady cash flow for R&D.
Makes sense.
And speaking of long-term, their backlog is it's absolutely staggering. Roughly $175 billion in total.
$175 billion.
Yep. And the commercial services backlog alone exceeds $140 billion. They basically said they're sold out through the rest of this decade.
Sold out through the rest of this decade. That's a powerful position to be in.
It really is.
And with such immense scale and responsibility, the commitment to safety isn't just a priority. It's got to be like the unseen guardian woven into everything they do.
Absolutely foundational. What's particularly noteworthy is that GE Aerospace was the first manufacturer to have its safety management system, or SMS, accepted by the FAA.
The first.
Yeah, a full decade before it was even required. That says something.
It certainly does. So given this commitment, how has their approach to safety evolved over the years? I mean, it can't just be reactive, right?
No, definitely not. They've really moved from reactive to proactive, and now they're pushing into truly predictive safety processes.
Predictive. How does that work?
Well, here's a fascinating detail. They're deploying AI-enabled tools to further improve inspection accuracy and consistency.
Using AI for inspections.
Exactly. Imagine artificial intelligence helping to predict potential safety threats before they even become an issue. It ensures that unseen guardian is always, actively looking ahead.
Okay, so they have these big strategies, this huge focus on safety and predictive tech. How do they translate that into actual daily operations on the ground in the workshops?
Right, that's where flight deck comes in.
Flight deck, what's that?
Flight deck is GE Aerospace's proprietary lean operating model. Basically, it means they're relentlessly focused on optimizing processes, cutting out waste.
Like lean manufacturing principle.
Exactly. It's how they systematically turn strategy into concrete outcomes and, frankly, how they drive their entire culture.
Yeah.
And the priorities are always crystal clear. Safety first, then quality, then delivery, then cost. Always in that specific order.
Safety, quality, delivery, cost.
Got it. Can you give us a concrete example? Like, where has flight tech made a real difference?
Absolutely. Let's take their largest maintenance, repair, and overhaul site, MRO, down in Selma, Brazil. They tackled a key bottleneck there, the lead time for CFM 56 fan modules. Okay, how'd they do it?
Well, they used value stream mapping, basically mapping out every single step to find the inefficiencies, and then implemented new flow lines. The result, they cut that lead time by over 30% down to under 80 days.
Over 30% faster. That's significant. That means planes back in service, quar.
Precisely. Big deal for the airlines and ultimately for travelers.
And it's not just process changes, right? I think you mentioned tools earlier. That AI inspection tool.
Yeah, that's another great example right there in Selma, too.
Yeah.
This AI-enabled blade inspection tool. It's not just making inspections more accurate and consistent, which is huge for safety and quality. It's also slashing the actual inspection time by roughly 50%.
50% faster inspections. Wow.
Yeah. These kinds of things, they directly add up to faster engine turnarounds, keeps the global system flowing.
This focus on efficiency, it clearly has to extend into their supply chain, too, especially these days. What's the picture look like there? Are things improving?
They are seeing ongoing improvements, yeah. Material input at their priority supplier sites was up a solid 10% sequentially in the second quarter.
Okay, 10% more material coming in.
Right. And maybe even more importantly, suppliers are now delivering more than 95% of the volume they committed to. That's nearly double where they were early last year.
That's a big jump, so supplies are becoming more reliable.
Seems like it. And that directly impacts their own output, their ability to deliver on that massive backlog we talked about.
And they're certainly not standing still on capacity either. Their plans sound pretty ambitious.
Oh, very ambitious.
Yeah.
The LEEP installed base, that's their newer narrow-body engine, it's expected to roughly triple by 2030.
Triple.
Triple. And the GE NX base, for Y-bodies, expected to roughly double. Overall, they're aiming to grow capacity by about 40% by the end of the decade.
40% growth. That requires serious investment.
Huge investment. Over $1 billion going into MRO and component repair facilities over the next 5 years. They've got new sites coming online like Zeos in Poland, which is already taking in engines.
Okay, but what about managing all that growth efficiently? I heard something about trapped inventory.
Yeah, that's a fascinating point. It shows their focus on capital efficiency. They identified this challenge of trapped inventory, basically parts waiting for other parts, which added about $3 billion between 2023 and 2024.
$3 billion tied up.
Yeah, think of it like having almost all the ingredients for a cake, but you're missing the flour. Everything else just sits there. Their goal is to improve inventory turns, how quickly they use inventory, by at least one full turn by 2028 as materials become more available. Shows that lean thinking again.
Right, always optimizing. Now let's shift gears a bit. Let's talk about what really defines tomorrow's flight. Innovation and, crucially, durability. These seem like top priorities.
Absolutely top priorities. And they track it closely with a key metric called time on wing.
Time on wing. For our listeners, that's pretty much what it sounds like, right?
Exactly. How long an engine can stay on the aircraft wing, operating reliably, before it needs to come off for a major shop visit. Longer time on wing means less downtime, lower costs for airlines. Big selling point.
So how are they innovating to improve that?
Well, take the GE NX durability package, which they rolled out back in 2021. It's led to a more than 2.5 times increase in time on wing for that engine.
2.5 times longer. That's impressive.
It is. They even have a fleet leader, an engine operating in really hot and harsh conditions, approaching 4,000 cycles.
A cycle being one takeoff and landing, basically.
Yeah. And it's staying on wing for about 5 years between shop visits. That kind of deep experience from wide-body engines like the GE NX, it's really helped accelerate the learning curve for their narrow-body ELAP engines.
So lessons learned on one platform help the others.
Precisely, which led to the LAB-1A durability kit released late last year.
Yeah.
That kit improves time on wing by more than twofold, basically matching the gold standard performance of the older CFM 56 engine.
So catching up quickly, anything else coming down the pipe for durability?
Yeah, they mentioned further design improvements to a critical part, the high-pressure turbine, or HPT blade. Those are already certified and set to enter production in the second half of 2025, so continuous improvement.
Okay, so improving current engines, but they're also pioneering entirely new platforms. Tell us about the GE9X.
The GE9X. This is the engine for the Boeing 777X. They're calling it the most tested engine in GE Aerospace history.
Most tested. How much testing are we talking?
More than 30,000 cycles logged already. That's like the equivalent of 6 years of typical commercial flying, all done before it properly enters service.
Wow, 6 years worth. So they're trying to ensure it's really mature right from the start.
Exactly. De-risking it as much as possible for the airlines, which ultimately means more reliability for passengers.
Okay, so the GE9X is about maturity at launch. What about the CFM RISE program? That sounds different. More ambitious, maybe?
Oh, definitely more ambitious. They described RISE as our most ambitious and transformative technological effort underway. It's a joint effort with Safran through their CFM partnership.
What makes it so transformative?
The core of it is its open fan architecture. Picture this. The big fan at the front, it's not enclosed in a nacelle like current engines. And it's designed to spin much slower.
Slower. How much slower?
About 1/6 the speed of a traditional jet engine fan. This fundamentally changes the propulsion physics.
Okay, an open, slower spinning fan. What are the benefits of that?
Two huge potential benefits. First, it's expected to be significantly quieter than today's CL8 engines. Think less noise around airports.
Quieter is definitely good.
And second, critically, it's aimed at achieving at least a 20% reduction in fuel burn and CO2 emissions compared to current engines.
20% less fuel. That's massive for efficiency in the environment.
Huge. It showcases what they call the genius of the end, really pushing the boundaries to balance durability with a massive leap in efficiency. It could genuinely transform the economics and sustainability of flying.
And it's not just commercial flight where they're pushing boundaries, right? They're active in military propulsion, too.
Very active. We're talking about things like the XA-100 adaptive cycle engine, the XA-102, which is tied to the U.S. Air Force's next-gen fighter program, NGAP.
Adaptive cycle.
Yeah.
That means it can change how it works mid-flight.
Essentially, yes.
Yeah.
Optimizes for thrust or efficiency, depending on the need. They're also involved in the Global Combat Air Program, that's a next-gen European fighter initiative. And they're investing in advanced hypersonic propulsion systems, too.
Hypersonics. Wow. All this must require a massive R&D budget.
Oh, yeah. Approximately $3 billion slated for R&D in 2025 alone. That's somewhere between 6 to 8% of their revenue, which is a pretty hefty commitment to innovation.
Okay, so this aggressive innovation, strong operational performance. What does it all mean for their financial trajectory? Are they feeling confident?
Extremely confident, it seems. They've actually reinforced their already elevated financial guidance for 2025 and significantly increased their outlook for 2028.
Increased it. By how much?
Okay, for 2025, they now expect total revenue growth in the mid-teens, operating profit between $8.2 and $8.5 billion, and free cash flow between $6.5 and $6.9 billion. All slightly bumped up or reaffirmed at the high end.
Mid-teens growth, strong profit, and cash flow. And for 2028,
that's where the bigger jump is. The 2028 outlook. Operating profit now expected to hit approximately $11.5 billion, and free cash flow at least $8.5 billion.
$11.5 billion profit. How much is that up from before?
Both those 2028 figures are up a huge $1.5 billion from their prior outlook. That signals some serious confidence looking ahead.
That is a huge jump. What's driving that confidence, especially in the commercial services part of the business?
Well, a big factor is the continued strength of their foundational fleets, especially the workhorse CFM56 engine. Get this, approximately 40% of the entire CFM56 fleet has still not had its first major shop visit.
40% still haven't needed major overhaul.
Right. And many airlines plan to keep flying these reliable engines well into the 2030s. So that means a growing wave of shop visits is coming, expected to peak around 2027. That's a very predictable, profitable revenue stream for years.
Makes sense, like a built-in pipeline of work. What about other fleets?
The dynamics are positive for the GE90 fleet, too.
Yeah.
The big engines on Boeing 777s. Strong demand there, especially with the surge in freighter aircraft conversions using 777s, means more shop visits, more revenue for GE.
Right, the cargo market boom helps.
Exactly. And then there's the growing LE aftermarket. Remember we said the installed base is set to triple?
Yeah, huge growth.
That naturally drives significant growth in shop visits as those engines mature. Plus, they're focused on developing new repair techniques specifically for LE parts. Their goal is to double the number of LE-specific repairs by 2028.
Which makes maintenance cheaper and faster for airlines.
Precisely. And here's a key milestone. LEAP aftermarket profit is expected to reach parity, basically match CFM56 profit by the end of the decade. That's a huge shift in their profit mix towards the newer engine platform.
Okay, very strong outlook driven by services. Finally, let's touch on their capital allocation. How are they planning to use all this cash flow? Balancing investment versus returning it to shareholders.
They emphasized a disciplined approach. Significant investment back into the business, obviously, to fund that growth and R&D we discussed,
Mm.
but also returning substantial cash to shareholders.
How substantial?
They're actually increasing their planned capital returns for the 2024 to 2026 period by 20%, up to approximately $24 billion total over those 3 years.
$24 billion back to shareholders in 3 years.
Yeah, and looking beyond 2026, they expect to return at least 70% of their free cash flow annually. So a clear commitment to shareholder value alongside that business investment.
So if we try to connect all these threads, tie it all together, what GE Aerospace seems to be doing is executing this really demanding dual strategy.
How do you mean?
Well, on one hand, they're rigorously ensuring the safe, reliable operation of this massive existing global fleet, the engines flying right now. That takes immense focus on execution, on services, on supply chain.
Right, keeping today's promises.
Exactly. But simultaneously, they're investing really heavily in these potentially game-changing technologies like RISE, like advanced military concepts that will define the future of flight.
Yeah, it's that balance. Operational excellence today while building, the next generation for tomorrow. It's a remarkable balancing act.
It really is. Their deep dives into durability, the RISE program's potential for efficiency, the military advancements, these aren't just technical projects.
No, they're strategic bets. Bets that promise to make air travel safer, more efficient, maybe even quieter for everyone, while also cementing their competitive advantage for decades to come.
That's right. And for you, our listener, thinking about all this deep dive into GE's operations, their financials, their tech roadmap, it really does directly impact your experiences.
Yeah, from the foundational safety systems you rely on every time you fly.
To the advancements that will eventually make future flights potentially quieter, definitely more fuel efficient, maybe even faster someday. It's all interconnected.
Absolutely.
So as you think about this incredible pace of innovation we're seeing in aerospace, here's a final thought. What excites you most about the future of flight? And how do you imagine these advancements might transform not just travel, but maybe even our wider world? Something to ponder.
Definitely something to think about.
We'll see you next time for another deep dive.